Hey everybody, welcome to the Accounting 240. Boy, is this week 10? I'm going to say this is the week 10 virtual meeting. I think I pressed record. I pressed record on this one. So welcome to everybody out there who's watching this after the fact. I have a great group of 17 people here. Or maybe it's 16 plus me, I'm not really sure. But thanks to all those who showed up and thanks to those watching in the future. We're going to talk about other income and deductions today. We'll start off by talking about other income, what constitutes other income. This is the last form of income that we're going to talk about before we get into calculating actual taxes payable, and then we'll do some GST, and that's all she wrote for the course, baby. So we're getting there. This is really exciting. We're getting there. So I'm going to share the screen. I'm going to walk through my lectures with you guys. We'll see how they're going. If we're all bored, then I'll jump into doing some problems. But there isn't that much to these things, so we should be able to cover them all off. I am hoping. I'm hoping. I'm not hoping and praying because I only believe in one of those things. But hey, you can think whatever thoughts you want. Let's get to it. Let's see from current slide. This looks good. And now we're about to share the screen. This is where it all happens, guys. Bammo! Here it is. It's other income and deductions. This is the overview of those concepts, and this should not take us very long at all. I'll get my chat window set up so that if you guys need to jump in there, you can do so. Shouldn't be a problem. When I'm going through the giant problem later on today, I'll talk about how I kind of want to approach that in terms of you guys and the back and forth. So here we go. Other income and deductions. There's, oh man, I'm so young there. Look at me. So what are we going to do here? Here's our learning objectives. What are some other sources of income that are included in net income for tax purposes? We haven't talked about them. We're going to talk about them today. We'll talk about some specific deductions from NITP that are kind of these other deductions that aren't deductible from a specific type of income. Every deduction that we've seen so far has been an employment income deduction or a property income deduction or a business income deduction, not these puppies. These puppies are deductible from any kind of income. That is an incredibly important distinction. Some of these will amaze you because you would have probably assumed that they were from employment income. However, because we didn't mention them before, they're clearly not. Oh man, tasty. So on we go. What else are we going to try and learn today? We're going to talk about moving expenses. That's exciting. We're going to talk about childcare expenses as well. What's deductible? If you've got a child and you want to deduct some related expenses, are diapers deductible? I doubt it, but let's find out. And we've got the RRSP deduction that we'll be talking about. These are your big three. There's a couple more smaller ones. So there's probably 5 other deductions in total. The big 3 are right here. And then there's a couple more. So guys, where are we in the income aggregate formula? Where do you think we are? I bet you could guess. It's here. We've done all this stuff, all done. This is only one more positive source of income. And this is what we call other income, and it's going to lump all other kinds of income into this category that we haven't discussed up until this point. So anything that doesn't meet the definition of employment, business, taxable capital gains, or property is going to be labeled as other income. We're not talking about this today. And then eventually we're going to get into this. Okay, this first video is going to just touch on this, and then we'll get into some specific examples of allowable deductions. Please note, man, oh man, please note where these fall in this income aggregate formula. These questions, the income aggregate formula, NITP, are one of the first things that we learned in the course pack, and it was done to a mediocre level on my exam. To me, these are gimme questions. Here's 3 or 5 numbers, put them in the order they're supposed to be in. This is the order in which they're supposed to be in. These other deductions come under other deductions. They're deductible against all types of income. That's why they fall into the aggregation formula later. They're not at the beginning. They're in the middle. You can't deduct them earlier on. You can only tabulate and add up all different types of positive sources of income. And then you can deduct things like childcare. You can deduct things like RSP, etc. If you have no positive forms of income, or if your positive sources of income are exceeded by the other allowable deductions, you can only grind down your positive sources of income to 0. You cannot create a loss by deducting other deductions. This should, at this point in the course, make logical sense to you guys, I hope. But as you can see, I've indicated here as well, must be positive or 0. You cannot create a negative number here. Super duper. Okay, so what the hell is other income? It's just, as I stated before, income that can't be classified as the other types of income. We've got strict definitions of what all those things are. We know all the rules for determining those positive sources. This is going to be other. It's just like miscellaneous, right? So here's some major sources of other income for you guys to focus on. We've got scholarships, fellowships, bursaries, etc. These are generally not taxable, but they are technically other sources of income. There are potentially scholarships that would be included in income. Now, technically they get included in income and then they're considered non-taxable as long as you tick the right boxes. And so they'll effectively be non-taxable, right? And anyone who's got a scholarship out there knows that. As long as your scholarship money is being utilized towards higher education, and I don't mean like Trump University or some other multi-level marketing, bullshit, I don't know, pyramid scheme, then you're okay in terms of having to include these in your income. So you're not going to be taxed on your scholarships. That would be mean. And you're not going to have to do that, okay? Pension benefits. Okay, so many people out there seemingly do not understand the concept of a pension. A pension is when you put money aside and it goes to like a big pension fund, and there are people managing that fund. Your employer withholds it. It goes to this nebulous place, which is a giant building in Victoria somewhere. And then people manage your money. And then when you get older and retire, you start to get some of your pension money. Now, you can take it earlier if you want, but that would be stupid, right? Because the more you contribute to it and the more this amount of money vests, the higher the reward is later down the line. So when you receive pension income from an employer's pension plan, it's not employment income. That's why we're talking about it here in other income. It's other income. It's other income, all right? Because pensions aren't necessarily entirely contributed to through employment, all right? In this case, it talks about employers' pension plans, but there's other private pension plans that one can contribute to. So the majority of pension income is is considered to be other income. So here's some examples. Old age security. So these are social programs within Canada. Old age security, Canada pension plan, employment insurance. We've talked about all these things in the past in the context of source deductions. So when you actually receive these things, if you're above a certain age in Canada, you just get old age security. Here's some money for you. Congratulations, you're old now. Here's some money. Now, of course, if you're making a lot of income in your elderly years, you don't get all of the old age security, and it could actually be reduced to nothing. I think when you get in the sort of the $80,000 to $90,000 range, the government's like, you know what, you're fine. You're not the intended recipient of old age security, so you're not going to get it. Does that seem like a ripoff? I don't care. That's what the system is. So if you don't like it, vote in somebody who wants to scrap old age security or just give old age security to people who are already rich. That's not the point of this social program. Same thing with Canada Pension Plan. On the Canada Pension Plan, you're entitled to as long as you've contributed to it over time. And then employment insurance is there for if you are laid off from your job. It is, in fact, taxable upon receipt. RRSP and RRIF, these are the benefits. So the reason that you put money into an RRSP is to remove it and use it in the future, right? You will actually ultimately get that money at some point. When you get that money, you're going to pay tax on it. Why? Because it's a tax deduction when it's contributed. We'll talk about the deductibility of RRSP contributions in a subsequent video. So when you put RRSP contributions into the bank, right, then your income goes down for the year and you can take a tax deduction. When you actually receive the RRSP monies in the future when you're retired, then you have to pay tax on it. That's why it's not that great to take out RRSP money before you retire, because you'll have to pay a huge chunk of tax on it. We'll talk a little bit about this. I think we're going to go through a problem, but if you guys are putting money in your RRSP and you're not 100% sure you're going to use it in retirement, I would not put it in your RRSP. I would put it somewhere else. Now, there are ways you can manipulate this to make it work for you. Like if you know you're going to take a year off, then okay, put money in an RSP and draw it down then. That way you'll be taxed at a very low rate. That's not the dumbest thing to do in the world. Very few people plan on taking a year off though. I did. It was supposed to be this year. Does it seem like I'm taking a year off? It does not. Does it seem like I'm bitter about it? I might be. That's fine. Okay, but that's one potential way that you could draw down an RRSP before you actually retired. So RRIF is Registered Retirement Investment Fund, I want to say. I don't know. It's all written out later on. And basically what happens is you reach a certain age and your RRSP, you can no longer contribute to it because the government of Canada is just like, yeah, you can't just keep getting this tax advantage as you creep into your 70s. So what happens is the RRSP gets converted to this, effectively this annuity, and then you're forced to take out a minimum amount over time. So the Registered Retirement Investment Fund, they're chunks of money that come to you later in life. It's basically taking out your RRSP money, and then you'll pay tax on it at the time. Okay? Okay. And these are more, I'll talk a lot about the tax ramifications of these things, but in terms of concepts, like conceptually, old age security is something that as a resident of Canada or even a citizen of Canada, you should have some idea of what that is, right? It's not really my job to teach that. My job is to talk about how is that taxed. So it would be really to your benefit to learn about the social systems that we have set up in Canada, just an overview of how they function and what they are. I recognize that a lot of people in the classes aren't necessarily from Canada and their parents aren't from Canada, and maybe they're not used to this kind of social system, but you can Google any of these things and find out as much information as you want from a very high level to getting into the details. I'm going to mostly just talk about the tax ramifications of these things. So everything I've mentioned so far is taxable. It's other income. That's why we're talking about it. Anything that's income is taxable. Workers' compensation happens when if you get injured on the job, then the Workers' Compensation Board of, I want to say British Columbia, I think this is on a province by province basis, they'll make some payments to you in order so that you can continue to feed yourself basically maintain a standard of living, which is, look, they don't give you 100% of what you would have been making at your salary, but they'll give you something. Technically, those benefits have to be included in income, but they are then deducted later on. So workers' compensation is a net impact of 0, which makes sense. If you're out of work, should you really be paying tax on workers' compensation? Debatable. Welfare. Yeah, welfare or social assistance. So welfare or social assistance is different from all these other things that we talked about. It's not EI. Social assistance and welfare are meant for people who aren't looking for work, and it's always hard to sort of describe who is generally eligible for this, but people who can otherwise potentially not work, and they're not necessarily not looking for work because they don't feel like it. There's very few people, whether or not you believe this, who are on social assistance who would like to be on social assistance. It's people who, in a lot of respects, have fallen through the cracks of society, and they suffer from mental health issues and addiction issues. And so they're not able to more or less at this present point in their lives, function as we would consider quote unquote normal in society. So this is an amount of income that's provided to them for sustenance, and it's not a lot. And I don't know how people survive off of it, but they do. And so that's welfare, and that is technically included in income, which seems terrible because people like that are rarely actually completing tax returns. But again, it's included, and then it's actually a Division C deduction, and we don't know what Div C deductions are yet, but basically the net effect of social assistance is 0. Full-time school program. Yeah, I don't know if that's how social assistance works. Maybe it is. If you're in a full-time school program, I think there's probably some other, you know what, you know better than I do. So if that's the case, and again, it's not, I'm giving a general sense of what social assistance is. I'm not familiar with all of its forms in Canada, and I'm not sure how that applies to people who are in school. I was unaware that this was something that was available to people who are going to school, but if that's the case, I would think that would be something else, but I don't know what I'm talking about. So thanks, Karen. Karen, if that's true, and if it is social assistance, then you won't have to pay tax on that, right? It'll go in and it'll come out. And I think there are some forms of social assistance, you're right. People are going back to school. It's sort of re-education programs and things like that, where you receive social assistance. The bottom line here, Single parent. Yeah, there you go. A long story, but on the single parent employment initiative. Yeah, so there are forms of social assistance. If that's what it is and what it's classified as, then you won't have to pay tax on that. But I can't say that for sure because I don't know the full details of that. But generally what I'm trying to get at here in a very long-winded way is that social assistance is non-taxable. It is part of income, but then it comes out later on. It's a deduction as well. Okay. It's not one of the deductions we're going to be talking about today. It's different. Research grants. Yeah, if you get a research grant to perform some research, you're supposed to include it in income. However, it's supposed to be net of the expenses that you incur. So generally, when people receive money to do research, they spend most of that money doing the research, right? It's just basically, if I get $100,000 to do research and I spend $80,000 on research, the additional 20%, okay, or the $20,000, like I'm pocketing that. And by pocketing, I mean, I'm paying to live. So that's the amount that you pay tax on, the excess amount over the net, like basically the net income that you receive from a research grant. Spousal support payments. If you are in a situation where you are receiving spousal support from an ex-spouse, then that has to be included in your income, period. Okay, so here's the scholarships, fellowships, and bursaries. Like I said, they're not taxable if the student is enrolled in full-time and can claim an education tax credit. I believe part-time as well, and it should say that also, but for now, just stick with what it says up here. It says only the first 500 is exempt annually. Okay, so here's how it works. If you're receiving scholarships, they're tax-free as long as you're using them for school. If you're using them for something else, you only get $500 as exempt. The rest of it has to be included in income, which makes sense. The money is supposed to be for school. Okay, so don't worry too much about the $500 exemption. Sometimes it trips people up. All of scholarships aren't taxable as long as you're using them for school, which is what they're for. There's the research grant. I said the grant less the expenses is taxable, easy. Support payments from a former spouse. Look, as long as they're periodic payments and not some big lump sum payment, they have to be mandated by some court decree. And they're meant for the maintenance of the spouse's, lifestyle. They're not child support payments. They are meant to go specifically towards the spouse to help them pay for their everyday expenses. Those amounts are taxable. If you're getting spousal support or alimony, that's taxable. Okay. Here's some non-taxable receipts just for fun. So people frequently ask me about, hey, isn't there money I can get on a tax-free basis? I would like to maximize that. Sure you would, Billy. Let's take a look at some of those amounts. Lottery winnings, great. Go out and win the lottery multiple times. You don't have to pay tax on that in Canada. Do you in the States? You sure do, but you don't live in the States, right? What happens if you go to Las Vegas and you win a bunch of money? Well, you're in the States. So guess what? Before you leave the casino, withholding taxes. If you don't, oh boy, taxes are withheld and they're paid to the IRS before you can come home. Or maybe you can come home. I don't know exactly. I've never been to a casino. Why would I throw my money away? And I've certainly never been to a casino in Las Vegas, despite having unfortunately been to Las Vegas once in the past. Lottery winnings here in Canada, if they're earned in Canada, aren't taxable. If you earn them in the States, you have to pay tax in the States. You would not have to pay additional tax here in Canada. Gifts. Yeah, if someone gives you $3,000, guess what? You've got $3,000. So if that's the maximum, if that's how you want to maximize, your income by people just gifting you a bunch of money, go out and make some friends. What's the opposite of like a sugar daddy? What's the opposite of that? A sugar baby? Become one of those. Just get a bunch of free stuff. Great, non-taxable. What else do we have here? Inheritance. Guess what? Tax-free. Now, the person who's paying the inheritance, there may be some tax for them, depending on what kind of inheritance you're receiving. If it's a bunch of property, there's going to be tax on that. If it's just money, it's no problem. It's no problem. Life insurance proceeds on the death of an individual. If a loved one dies and you receive insurance proceeds, you don't have to pay tax on that. Profits from betting or gambling. Okay, as long as it's not your profession, if this is something that you're trying to do, which is become a professional gambler, then you have an adventure or concern in the nature of trade. You are now earning business income. So you could potentially deduct your expenses from that, whatever the expenses associated with being a professional gambler are. Alcohol, whiskey, what else? Sunglasses, losses. You're losing money most of the time. Where are you? Las Vegas, prostitutes, whatever Whatever you're spending your money on, if you can tie that in somehow to your gambling winnings, then okay. It's very difficult to make a living as a professional gambler, despite what many people out there may believe. There are very few people who can consistently do that. But hey, if you can, good, you pay tax on it, unless it's just like, oh, I go to the casino once a month and I make $400. Okay, great. You don't have to pay tax on that. Is good? Is good. Okay. Okay, so as long as we've seen this in the past, I gotta be careful with the ums. We've seen this in the past in respect of an employer contributing to various programs, accident insurance, disability insurance, sickness, etc. Now, if the employer is making the contribution, then if the employer is making the contribution, then all of these receipts are taxable. But if the employee pays all the premiums effectively, like if you're paying your own premiums for accident insurance, disability insurance, sickness, et cetera, when you receive the benefit, then it's tax-free. So if employer pays, taxable benefit, right? Ultimately, the premiums that they pay are a non-taxable benefit, but if you receive any of the money for being sick, then that is taxable. The opposite is true if the employee themselves pay for all the premiums. If the employees pay for the premiums, any receipts of income, i.e. cash, are going to be received on a tax-free basis. Huzzah. So look, can you make a living just maxing out your non-taxable receipts? I encourage you to try. What percentage of your income is going to be lottery? What percent is going to be gifts? What percent is going to be inheritance? Knock it out, guys. See what you can do. Okay, so that's basically the other types of income, you know, in a nutshell. That's not all of them, but it's the major ones that we care about. You're not going to see anything different than that. There's only so many questions I can ask about other forms of income. You need to know specifically what goes in there. Oh, things like retirement allowances. Retirement allowance, that's other income as well. I'm trying to think of anything else that might be considered other income. And I can't off the top of my head, but if I do, I'll let you know. Okay. Let's see, what else do we have here? So other deductions, these are, as stated, these are deductions that cannot be deducted against any specific type of income. They're going to be deducted from that subtotal that we saw earlier in the aggregate formula. So against any amalgamation of employment income, business income, property income, taxable capital gains, etc. This is where you deduct those things later on. You can't create negative net income for tax purposes, as we talked about. Major deductible items, RRSP contributions. It says next week. No, it's now. Expenses of objections or appeal. If you feel like you've been wronged, like the tax authorities have miscalculated your amounts owing and you want to sue them, or take them to court. I don't know if you're suing the federal government per se, but you need to incur legal expenses to try and recoup, you know, the fact that you've been wronged by the CRA, then any expenses associated to that, expenses of the objection or the appeal that you're making, like, and this, a good example would be legal expenses. Those are potentially deductible as well. This is very small. Okay, major ones are RRSP, support payments to a former spouse. So like I said, the receipts of those payments are taxable. The payments of those payments are deductible. They will reduce the payor's income. We also have, right, and so the payments, again, have to be periodic and subject of some court order, court decree. Eligible moving expenses, we'll talk about. Childcare expenses, we'll talk about also. So that to me is, I believe, other income. Why do I have this up here again? I don't know. That's it. That's it for this one, guys. Any questions? Any questions? Any questions? Do I want to keep my ink annotations? I don't. Questions, guys? Shutting her down. Seems like very few people are looking to ask me questions. I'm going to blast through the other videos or concepts that I've got here. I'm not going to spend a ton of time on them. My expectation is that people have delved into this prior, right? All these lectures are recorded, as I've stated many, many times. I think my focus should be more on doing things like answering problems. Okay, so I'm going to do a little bit here, a brief overview. I'll try and make it briefer than I have been, and then we'll jump into some problems. Ooh, I got to turn the fan on. It's still so hot in here. I don't know why. It's so warm in here. Okay, fan's on. Okay, no questions. Great. What are you going to do? What do we want to start with? Childcare? Sure, why the hell not? There it is. Can you guys see the childcare expenses? I hope you can see it. No one's asked any questions, so I hope you can see childcare expenses. We'll talk about that. This is a very simple version of childcare expenses. I wouldn't ask anything beyond the scope of what's in this video personally. There is one specific add-on here that I think you might see in some of the childcare related questions, which I find frustrating because I argued against it being included, but maybe I can talk about it a little bit, and I can take it straight from the course pack because there is some course pack stuff on higher income childcare deductions as well. Okay, so childcare expenses, these are amounts a taxpayer is going to pay to someone else, presumably, or in respect of their children, so that they can either earn income from employment, earn income from a business, run their business, or attend school. So if you as a parent are incurring childcare expenses, somebody's looking after your kid so that you can work at a job, run your own business, go to school. Okay, there are some deductions that you can make in respect of those expenses. So here are some potential expenses that you may be able to include. So lodging at a boarding school. This does not say private school, it's boarding school. Overnight sports camp, where there's some kind of lodging involved because you're overnight. Presumably they're not sleeping out in the bush. Day camps or sports school. Now there are certain limitations on day camps. We'll talk a little bit about the limitations. Nursery school, babysitting, daycare. Daycare is one of the most common ones, obviously. If there are any parents out there, I see we had a single parent with us in the mix today, probably more than one. Babysitting and daycare are big expenses that people are incurring, so presumably they can sit here and take courses like this. Now, I don't know if taking courses online allows you to look after your child from home, but I suspect that if you're working from home, but your kid is there, you're not getting very much work done. I think that's probably a major challenge, although it would allow you to save on a lot of these expenses. I guess you just lock them up in a paddock or something like that. Or do you have like a closet? I have no idea. Look, I don't rear children. What's a boarding school? A boarding school is a school that you send your kid away to. They basically stay there for overnight for weeks, months, etc. Right? There's a component of lodging to it where they are going to live there. So boarding school is a place where they live. Right? So if you're sending your kid to boarding school, I've never been to boarding school. I don't know anybody personally, I think, who's been to boarding school, but that's boarding school. Okay. Okay, let's see what else we got here. Okay, so we've got families with two parents. So there's some debate as to the deductibility. If you've got a two-parent type situation, which I don't know, it's probably half of people have a two-parent type situation. The other half don't. I don't know what the stats are anymore. So childcare expenses generally in a two-parent household are deducted by the lower income earning spouse. Generally, that's the way it works. There's a couple caveats on that, which I guess I can jump into, but I'll touch on very briefly. So here's some expenses that are not eligible in terms of deduction. So if you're paying your relatives under the age of 18, you can't just pay, is it under the age of 18? Sure, you can't just pay your kids to look after your other kids, because that would effectively be income splitting. So you're not allowed to do that. I mean, you can do it. You can pay your kid whatever the hell you want, but you're not able to deduct it from your income. And if you were, you see how it would be deduction from the parent's income, but it would increase the child's income, thereby splitting income between the two. So it lends itself to an incredible amount of abuse. Now this says relatives. So people who are related are your children or your children's children, etc. People who are not related are like your nieces and nephews. So you can technically pay your niece or nephew to look after your children, and you can deduct that, but make sure that if you are deducting it, then your niece or nephew are including it in their income. Okay, so likewise, let's say I had a wife of some sort or spouse, all right? And then I also had kids running around here. And then I was all, I gotta go out and make a living. So I'll pay my spouse to look after the kids. I'll pay her 40, 50 grand. Great. So in theory, my income would go down, spouse's income would go up. We'd be paying tax at a lower marginal rate individually. That's something that you can't do. Why? Because it's income splitting, and you can't income split in Canada. The end. Oh, I got somebody trying to get in here. There we go. So fees for activities where the child care is not a component of that activity. So like fitness things. You go to Girl Guides. There's no child care at these things. You go to karate. right? You guys have seen Cobra Kai. There's no childcare element to that. It's just kids kicking the crap out of each other, right? You're there for sporting events, swimming lessons, etc. Childcare is not a component. It's just instructional. So you can't deduct those. There used to be a tax credit for it. There's no tax credit for it anymore. Too bad. Medical costs. Yeah, medical costs aren't childcare expenses. I mean, they may be incurred in respect of your child, but they are going to be what we call a non-refundable tax credit. And we'll talk about that in the non-refundable tax credit conversation, which is maybe next week or the week after. I can't remember. Okay. Transportation costs. Great. You send your kid to and from school in a taxi. Can't deduct that. The end. Or any other form of transportation. It's not deductible. Okay. So what are some other limitations? The childcare expenses that are incurred are potentially deductible, but only in respect of children who are under 17 at the end of the tax year, and they are limited by the following three factors. Okay, so what are the actual costs? It's the lesser of these three amounts. We are familiar with lesser ofs at this point. So you're going to punch in what are the actual costs incurred in a year, and then we have these annual amounts. It's $5,000 per kid who is between 7 and 16, right? Between 7 and 16. $8,000 for a kid that is under 7. $8,000 per kid. You got 6 kids under 7 times 8,000 by 6. You got a $48,000 massive deduction, and $11,000 for a child who has a mental or physical disability. Now, what specifically constitutes a mental or physical disability? I will leave to your Googling abilities to look up. There's never going to be a situation where I ask you to ascertain like, oh, is autism a disability or is diabetes a disability? Like, I have no idea. And it's not up for me to decide those things. And those things change all the time. Like some years the CRA is like, you know what? And this happened a few years ago. Autism doesn't count anymore. So people are like, what? You've always allowed us to deduct childcare expenses in respect of an autistic child as a disability in the past. And then there was some big kerfuffle about it. So I'm just going to say so-and-so has a child who's 6 years old. They also have a child who has a physical disability, in which case you will know that the maximum amount here that they can potentially deduct in a year is $11,000. Okay, I'm not trying to make you make that decision. And the third term is 2/3 of the taxpayer's earned income for the year. Earned income is a specific term as it relates to childcare expenses. Now we're going to learn that there's also a term called earned income that applies to RRSPs. We'll talk about that later. Earned income as it relates to childcare expenses is these things. It's these things. Employment income. That employment income includes any employment income benefits because that is employment income. If you have a taxable benefit, it's part of employment income. That should be implicit in my writing employment income there. I don't need to write employment income including taxable benefits because employment income includes that already. And everyone should know that because we've already had a midterm on it. Business income, research grants. That's it. That's what earned income is. So you add all those things up, multiply by 2/3. I'll give you a hot take. It's never that one. It's never that. It's generally the middle one, at least in questions that I've seen, but I'm not, don't quote me on that. You may have spent less money on childcare expenses than $5,000 on your little kid or whatever. So a lot of the time it's the middle one. It's rarely the 2/3, but look, if you can eyeball, then like say earned income for the year is like $120,000. Okay, 2/3 of that is going to be 80 grand. It's going to be bigger. Does that mean you cannot determine what earned income is multiplied by 2/3 because you're like, oh, I already know it's going to be the middle one? And the answer is no. You have to calculate all three of them. If you only do 2 out of 3, you only get 2 out of 3 of the marks. Why? Because how the hell would I know you knew what the other one was? I'm trying to evaluate you. Maybe in real life that would make sense. It doesn't make sense here. We're not in real life. We're in some bastardized version of real life. So you need to calculate all 3 and show them to me so that I know what you know. If you leave it blank, I'll just assume you don't know what it is and I won't give you the marks for it. According to the Coursepack, it also included child support payments received. We already talked about that. That's okay. Receipts. This is a deduction. If you're receiving money for child support, wait, child support? No. Child support's neither taxable nor deductible, Samiri. Huh. Samiri, I get what your question is now. I was confused by your question for a moment, and now I get your question. It makes sense to me now. Okay. Okay, so do we need to do a quick example here? Ugh. So we got these two people. Oh, look at them. They look so happy. Oh, they look so happy. Then what happens? So they're married and they incurred 22 grand worth of daycare expenses during the current tax year. Sure. For their three children. They got a kid who's 4, they got a kid who's 7, they got a kid who's 11. James and Vesper's earned income for the year. So they each have earned income of $82,000 and $95,000 respectively. So James's earned income is going to be lower than Vesper's. Therefore, he's going to be the one taking this deduction, and it's $82,000. Can we have the PowerPoints? Okay, sure. You don't have the PowerPoints? I've got the videos up there. The PowerPoints aren't up there? Okay, PowerPoints. How do you study from a PowerPoint? Okay. So we want the maximum childcare expense deduction for these two. Sure, fine. Yeah, but Landon, what do you do with PowerPoints? You just read PowerPoints? Okay, if you guys are studying PowerPoints as a study tool, you're not going to do as good. I'll put them up there. The course pack is where the actual information is. The PowerPoint is me condensing things in order for me to like run through a video on them. I think you're missing out by studying PowerPoints, but sure, whatever. Do whatever you want. Okay. Crap. Yeah, I don't have this written out here. So why don't I just make it up as I go along? I need a spreadsheet for this, I guess. I'll just whip this up. That always goes super well. All right, so I'll just whip this up here. I need the info, childcare over here. Okay, so childcare deduction for James and Vesper. Okay, so James will make the deduction because he is the lower income earner. Childcare expenses. Expense deduction. It'll be the lesser of three things. One, which is going to be the actual expenses. What was it, 22 grand? Okay, 2 is going to be the annual limits. So we have what? 2 kids who are over 7 and over, right? And then we have 1 kid who's under. So it's going to be 5,000 times 2 plus, I guess I'm going to say 8 grand. That's the kid who's under 7. So that amount is going to be equal to 5,000 times 2 plus 10, 8,000. Okay, 18 grand. And then we have 3, which is 2/3 times earned income, which is going to be 0.6667 times, what was the earned income for Jimmy James there? Jimmy James was 82 grand. Okay. Okay, so this equal 2, 0, 0, hey, what's the maximum child care deduction? It's this. It's the lesser of those 3 things. So conclusion. Max child care deduction is 188. Yay, that's it. That was a fun little thing we did. All right. I'm going to close that back down. I'm done with childcare. I'm going to jump into moving. Oh my gosh. I'm going to motor through this. like I was moving. So there's one problem I really want to go through with you guys. I think it's a valuable problem to do together with you guys. So moving. So a lot of expenses that are incurred by a taxpayer to move to a new location are potentially deductible. They have to be incurred to relocate to commence a business or to start employment at a new location. They could potentially be deducted if you're going to move to a university. However, these expenses are only deductible generally to the extent that you earned income at the new employment or business or education. So very, very rarely, if you move for educational purposes, can you deduct anything because you have no corresponding income, right? And that income needs to be from education. It can't be from work because you didn't move somewhere to work. Presumably you moved somewhere to go to school. If you happen to get a job while you're at work, that's not the reason that you went and moved, right? You could try and argue it if you felt like it. I don't know if that would work or not. I doubt it, but you could try. Okay. So like it says, to the extent of income earned in the new location. Move can be within Canada or to from Canada. Any question that I ask you is going to be within Canada for sure. Here's some deductible expense. Travel costs, meals, transportation, lodging, transportation and storage of your belongings. Temporary board and lodging in the new location. So you move to a new location, you can't move in right away. Any amounts that you incur to basically to eat or to stay in a hotel while you're away up to 15 days are deductible. But if you sit around waiting to move into your new place, like let's say you move from Halifax to British Columbia, all right, and the house that you are renting or moving into in British Columbia isn't going to be ready for another month. Well, 15 days of that you can deduct, but the other 15, why'd you move so fast? I don't know. You can't. You can pick 15 days, but they have to be, as far as I know, contiguous. I'm not entirely sure. Maybe you could pick the most expensive 15 days. You can pick the most expensive 15 days, which would be to your benefit. Did you have to cancel a lease at the old residence in order to move? You can deduct that. Selling costs to the old residence. Oh yeah, quarantine, sure. We're not moving to New Brunswick. If you were, you wouldn't be allowed to move there right now, or the other Maritimes. So yeah, I guess the quarantine, that's smart, Karen, I like that. So selling costs of the old residence, if you are to sell, if you were living in a place that you owned prior to moving, if you incur selling costs associated with that, like realtor fees, et cetera, legal fees, land transfer tax. Cost of maintaining vacant former residence. So look, if you have to move for work, but you can't sell the place where you were living before, you're going to have to pay upkeep. And there's going to be landscaping costs. There's going to be utilities costs, et cetera. So you're going to have to pay for those. You can potentially deduct the expenses associated with that. Now you can deduct the expenses of buying a new home. Costs of buying a new home are not the cost of a new home. Anytime you guys are on a test and you're trying to deduct something like $400,000 or $800,000, you're wrong. You can't deduct that from anything. So just be like, wait a second, does this make any sense for me to be deducting 400? This always screams to me like, this person doesn't know what they're talking about. Because if your income for the year is like $80,000 and you're trying to deduct $400,000, you're missing something. Right? There's just something that's not going, it just doesn't click in. Like if you receive repayments of a loan. Yeah, you receive repayment of a loan and it's like a $400,000 loan. You don't include that in income. That's money that you lent to somebody from your own money that was tax-free. You don't then get that money back and include it in income. So that always screams to me like, there's a real disconnect in terms of what people are doing here. Anyway, so look, the costs associated with buying a new home, that's like realtor fees, legal fees, et cetera. You can deduct those only if you moved from a place of where you resided before, like you owned a home. If you owned a home in Halifax and then you sell it and then you move to British Columbia and you buy a home, the costs associated with buying the home are deductible, okay? But if you were renting in Halifax and then you moved to British Columbia and you bought a home, the costs associated with buying a home are not deductible because you just decided to upgrade your life, which is awesome, but you can't take a deduction related to that. So here's some non-deductible expenses. If you want to like spruce up your house that you're selling to make it look better, nope, that's just something that you did. That actually increases the ACB of the house. Presumably you could charge more for the house too. So did you lose money on the sale of your home? You can't deduct it. Are you nuts? There's no capital losses or deductions on the disposition of a depreciable property. Travel expenses, house hunting. I moved to Nanaimo once, guys, and I went over there and I spent a day poking around and trying to find places to live and to stay. I don't know. I probably spent $60. I can't deduct that. Okay. Travel expenses for job hunting in another city. Hey, I think I really want to go live in Saskatoon. So I'm going to go out to Saskatoon and I'm going to look for a new job. And then while I'm there, there's hotel costs, there's meal costs, there's, I don't know, buying some beer at the local brewery. Yeah, I can't deduct any of that. So the new home location has to be at least 40 kilometers closer to the new work school location from the previous home. So you can't just move like 20 kilometers down the road and be able to deduct moving expenses. Got to be 40 clicks closer. So your moving expenses are only also deductible to the extent that you earn income from that new location, meaning any excess amount would be carried forward and could be deducted from income earned from that new job or business in the subsequent year. So you could deduct that in the future. Generally, you need receipts. There are a couple simplified methods. Like you can't just deduct things willy-nilly, right? And this is the same goes for most things, is that you need some sort of paper trail. However, people recognize that there are it's a bit of a haphazard process moving sometimes. And so there's a couple of simplified methods of calculating your moving expense. So there's a flat rate of 17 bucks per meal up to a maximum of 51 bucks a day. Do the math, 17 times 3 meals. I guess the standard is that people eat 3 meals a day. It's so funny how that's sort of ingrained in us, where no one would be like, wait a second, you only eat 2 meals a day? You eat 5 meals a day? What is the problem with you? Everyone just like socially accepts. I wonder if this is true in other places or if it's like North America. I know in Europe it's generally 3, although the kids that I see all the time over there, my family, they eat like dinner and then they eat supper. Okay. So anyway, flat rate for meals. You don't need receipts for these two things. So what you're going to do with meals is be like, well, I actually incurred, I don't know, 12 bucks a day per meal. I'm just eating beans and rice, man. But you want a bigger deduction. All these things you want to maximize, right? Income amounts you want minimum. With deductions, you want to maximize. So if you figure out that, okay, the actual amount of meals expense I incurred was small or smaller than 51 bucks a day, then you can just deduct 51 bucks a day. Okay, is 17 bucks a meal a lot? Really depends on what you're eating. That's not going to cover your dinner at White Spot. It'll cover your dinner at Subway, but then you also have like, you know, horrible heart disease to deal with. And the fact that you ate Subway is like going to be a health issue for you. Vehicle expenses incurred, well, this says 53 kilometers for in BC. These things change every year, guys. And I actually changed this in the problem, but this is 54. This is 50. They change every year. Thus the sadness of having to teach tax, because we have to update so much stuff. And sometimes it doesn't make it in the slides. There's different rates for all the different provinces. I Googled this today. It's Googleable in 10 seconds. And they change from year to year. The province of origin is the rate that they use. So you would times this by any amount of kilometers incurred to drive somewhere. So you could take a look at my vehicle expenses, what they actually were. You'd compare the actual versus the 54.5 cents per kilometer. Whichever was the greater one, then you would deduct that. Okay, so you've got an option for those two things. People, for some reason, these things drive them crazy. There's not much going on here. Just figure out which one of the two options is biggest and deduct that one. So here's an example. This is so boring. Okay, so we've got this guy, Tiger. He moves from Vancouver townhouse to his new home in Victoria. He wants to start a new position with the government. Hey, this is a common move. So his earnings, because he moved in late November, he only made $4 grand for the rest of the year. That was his income from his employment, was $4,000, because he started working in mid-December. Here's some of the expenses that he incurred. So he's got, he canceled the lease on his townhouse in Vancouver. He had to pay $1,000. Commission and legal fees to acquire a new house in Vic. When you acquire something, you own it now. So he bought a new house in Victoria. He paid some real estate commissions. He paid legal fees. That's quite low. Moving van. He had to move all his stuff. $3,800. Flight and 5 days accommodation. That's right. He took the float plane. It's like $250. Or maybe he took Air Canada. I have no idea. And then he spends 5 days staying at, I don't know, the what's that hotel? It starts with M. I stayed in it for a while. It's a nice downtown hotel. It's like a cute little boutique hotel. I can't remember what it is. But anyway, he stays in some fancy hotel. He incurs $2,400 worth of expenses. And then he ships his belongings, right? He's got a moving van, but there's also a bunch of crap that it's too big to go in the van. I don't know, a grand piano or something like that. So he has it shipped over. I don't know. Those are expenses. What are the tax consequences of the move for Tiger Tanaka? Let's see. Well, you guys, you tell me. Let's go through these one by one. One by one by one. Of all these expenses, you tell me. Can he deduct the lease cancel? Let's say, are these eligible expenses? Lease cancellation, yes or no? Yes, agreed. Carson says yes. Mary says yes. Good work to both of you guys. You're awesome. Karen says yes, also awesome. Commission and legal fees to acquire a new house in Victoria. Where did he move from? Rented townhouse. And then he buys a new house in Victoria. Oh, snap. Right? You can't. He's moved from a rented home to a home that he owns, so you can't deduct that. Can't deduct that one. That's okay, guys. Look, 1 out of 5. What do you want? Moving van. Yeah, no problem. Flight and 5 days accommodation. Ooh, what do you think about that? The flight and his staying at, what's the name of that hotel? Man, I love it. Magnolia, the Magnolia Hotel. I stayed there for 2 weeks once because I was teaching in Vic before I moved there. It was awesome. CPA paid for it. Ka-ching. CPA paid me 10 grand to teach a 2-week course, and then they paid me $9,000 in expenses. It's great. So yeah, you can deduct that. Landland says yes, and Landland is correct. And then to ship your stuff, sure, that's just moving expense. So those are the ones that you can actually, let's see. Da, da, da. How much can he deduct this year, though? So look, $1,000, yes. Commission, legal fees, no. Moving van, sure. Flight, yes. Shipping, sure. So the total amount is $8,050, but he only earned $4,000 from his new job in Victoria. So he can only deduct $4,000 of that in the current year. Next year, he'll be able to deduct the remainder as long as he's earning income from his Victoria government job. So deductible in the current year is $4 grand. This is the amount that can carry forward is $4,050. And that is moving expenses, everybody. Feeling good? I feel good about it. Okay, that's that. Do you want to keep your ink annotations? Yeah. Okay, so next up is RRSPs. Oh God, this one's too long. This one's too long. Okay, here's your options, guys. I talked you through a video that you can find the recording of online, or I can do a giant problem. I don't care, but I'm leaving at 2:20. I keep staying too long. They're not paying me for that. What do you want? RSP lecture? Problem. Can you claim moving expenses for your dependent? Sure. I mean, are they going to be different from your own moving expenses? You mean like food? Sure. Yep. Yes, correct. Giant problem, giant problem, giant problem. Okay, I will. I'm going to do 5 minutes on this and then giant problem, okay? That I agree with you guys. I like giant problem. Uh-oh. See, you can just listen to me do this. So I'll leave it up to you to go and figure out what RRSPs are, okay? Basically, you're putting away money for retirement and you're choosing to put that money away for retirement. It's self-directed, right? Registered retirement savings plan. So if I want to save for my retirement, I go down to the bank, I open an RRSP account, I contribute $5,000 to that account. My income shrinks by $5,000. This is in the other income and deductions. This is an other deduction. It reduces your income for the year. Do people love this? Of course they do. This is one of the greatest tax benefits that we have in Canada, is the ability to contribute to one's RRSP. It provides for tax sheltered earnings while the money is in the registered retirement savings account. So if I were to put in $5,000 and I were to buy stocks with that, the stocks increase in value, and I also incur dividends. Those dividends are incurred tax-free while they're sheltered. And the gains, if I were to sell them within the RRSP, the gains are also tax-free. Now, when I take the money out in the future, that money's taxable, but it's in the future. So this allows me to basically compound my earnings on a tax-free basis. The vast majority, 2/3 of Canadians, I believe, never take advantage of the RRSP. They contribute nothing to it. That's not good. It's so beneficial. Anyone who's an accountant or going into accounting should be taking advantage of this because they understand how valuable it is. So I think this is incredibly valuable. You should be contributing to your RRSP. So like I say, they're deductible from income, they're not taxable or withdrawn, and they generate higher returns. This is just a quick example of how that works. I'll let you walk through this on your own. Trust me, it's better. Okay, I'm not going to ask you a question about that. Okay, so here's how you could determine what the annual contribution limit is. This you need to know, so I'll walk through this, like I said, in my quick few minutes. The annual contribution limit is the lesser of two things. 18% of the individual's prior year earned income. See that term, earned income? Earned income is different for RRSP calculations than it is for the childcare expenses. Right? It is a different definition. This is an area, make an asterisk to yourself. This is an area that people mess up all the time and they get confused by. I changed this. I changed this. Oh yeah, okay, that's fine. Sorry. I was mad at myself for a second, but I shouldn't be. So for example, okay, there's an annual limit, okay? So the 2017 annual limit was $26,010. This increases every year with inflation. I will tell you what the rest of them are, okay? I can't change these slides every year, but I added in an additional slide so that I could throw in like, okay, here's what it is gonna be for this year. So 18% of the prior year earned income, that is very important. People screw that up all the time too. They don't use the prior year's earned income. If I was trying to determine my maximum contribution limit for 2020, I would use 18% of my prior year, 2019 earned income, and then whatever the prescribed maximum rate was for this year. If you don't make a contribution in the current year, you can keep that contribution room. That just gets carried forward to the next year, and then you can add more to that based on the current year information, right? So you can just keep building and building. If you never contribute to your RRSP, the contribution room just keeps getting bigger and bigger and bigger. You have a finite amount of contribution room. Once you contribute, right, the excess that you have gets smaller. If you take money out of your RRSP, you don't get that contribution room back. So that makes people sad. So don't do it. Really, if you're going to put money into your RRSP, you should have a specific goal for it, which is generally retirement, thus registered retirement savings program. It's not registered, I don't know, Tesla savings program where you're like, I'm going to save up for a car and I'm going to put it in my RRSP. You're missing the concept here if that's what you want to do. That would not be my advice. Here are the annual prescribed limits for the next, for some previous years and for the current year. So the one that you care about probably is 2020, which is $27,230. Next year, it's going to be $27,830. Look, it just increases on an annual basis. So here's what earned income is for you guys. See, there's spousal support. Just not sure about the other one. This one is for sure right, okay? So here it is. Earned income includes employment, all the taxable benefits as well, business income, rental income, any royalty income, spousal support income, and then research grants net of related expenses. You would also then deduct from earned income any business losses, any rental losses, and any deductible spousal support payments that you made, okay? So that's the earned income. And then, sure. So let's assume a 2019 salary of 150 grand and no other earned income. What's the maximum RRSP contribution for 2020, assuming that there wasn't any contribution room from prior years? If there's stuff left over from prior years, you just add that on. So here's the annual contribution limit. It's going to be the lesser of two things. One is 18% of the earned income of the prior year, 2019. So 150 grand times 18%. Boom, looks like it's 27,000. The second term is, what's the prescribed annual limit? It's $27,230. Therefore, this is the amount that we're going to be using. It's the lesser of those two things. Guess what? That's your contribution limit. You can contribute up to $27,000 for the year. Okay, up to $27,000 for the year. Now, your deduction limit's going to be limited by how much actual income you have, but for another day. Okay. Real quick, RPP, there's only so much that the Canadian government allows you to save in a tax-sheltered vehicle for retirement. Basically, if you make contributions to a registered pension plan, then you'll be having two things going. You have the registered pension plan, you have a registered retirement savings plan, or RRSP. If you contribute to an RPP, it decreases the amount that you can contribute to an RRSP. I don't know why. It seems like an unfair limitation, but it does really benefit. Being able to contribute to these things can benefit people who are in a much, much higher tax bracket, so they have to put limitations on them, which I get. So basically, RPP, what happens is that if you're making contributions to a registered pension plan, you will receive a number for the prior year, which is your pension adjustment, and you will have to decrease the amount that you can contribute to an RRSP by the pension adjustment amount. So pension adjustment of the previous year is used in the current year limit calculation. So any individuals belonging to an RPP, here's the annual contribution limit. It's the lesser of these two things, as we talked about before, minus any prior year pension adjustment. So here's an example in which we have a pension adjustment from the prior year of 5 grand. So same thing as we saw before, 18% of earned income, right? And then the 2020 prescribed limit. So the smaller of those two things is 27. And then we have to reduce that by the pension adjustment, which is going to come in down here somewhere. Hey, there it is. Maximum contribution limit for, oh, Ryan, for 2020. That should say 2020, and it does. Ugh. Just behind updating these things, guys. The 375 course is killing me. It's killing me. Okay, questions before we jump into our giant problem? Questions? I got 35 minutes to do this problem. I've done this problem 700 times. It's going to be challenging, but you'll have a recording of it so you can go back and watch it. I'm going to ask you guys while I perform this giant question for you to save your questions until the end. So what I've been finding is that when people pepper me with questions throughout, it really distracts me, especially when I have to stay focused. So all you got to do is write down your question somewhere or take note of it. You can even write it in the chat. I'm just not going to respond to it until I'm done answering the question overall. Also, because I'm recording these things for posterity, meaning I would like to use the recordings of the problems in future terms, when people are watching them, it's really annoying when I'm going through the problem and then I'm answering questions from people in a chat and they can't see it. Does that make sense? So what I'll do is I'll do the problem with you guys and then I'll answer your questions on it afterwards. Does that sound okay? I hope that sounds okay. I'm not trying to rip anybody off, but I got 2 hours with you guys a week and I'm doing my best here. Okay, so let's get to the problem. Nobody has any questions. Let's get to it. Pa-pow, pa-pow. Guys, this is problem 6 from the course pack. Okay, it's problem 6 from the course pack. And this is chapter 7. Chapter 7 course pack. I've made a fun template. I'll be filling in the template. Can you have the template? Why? You've got the solution. Here's the template for you guys. So I'm going to find the, I'm going to find, there. Problem 6. Okay, here we go. Everybody see it okay? I can only make these things so big. I get that it's not optimal for people's viewing. It's as best as I can do. Okay, so I'm just going to do a quick intro. Hey everybody, welcome to the Accounting 240 demonstration of Coursepack Problem 7-6, meaning Chapter 7, Problem number 6 from the 2020/2021 version of the Coursepack. So this problem has to do with all sorts of other income and deductions. It's a really good problem, comprehensive problem, something that you could easily see on a final exam. It might be a little too complicated to incorporate all of these elements on a final exam, but it's not unreasonable. Even though there are a lot of numbers and there are a lot of points here, it's not unreasonable. So let's get to it. I'm going to read through the narrative briefly, and then I'm going to go and solve the problem in a template that I have created just to do that with you guys. So buckle up, folks. Here we go. So here's problem 6. In early July of 2020, we have Yasmin separating from her husband, meaning she is a single parent. She has maintained full custody of, they have one kid who's a 6-year-old. Look, as you read through these questions, you should be making mental notes in your head. Okay, single parent, could be some spousal support payments. 6-year-old girl, probably some child support payments. Since May, she's been working of 88. Why that's important. She works in Penticton just prior to her separation. She chose to take advantage of a severance package from her Penticton employer. She accepted a staff position in Kamloops and moved directly from Penticton to Kamloops on September the 1st of 2020. She sold the former family home in Penticton. Look, she moves. There's going to be moving expenses associated with this. She has some experience preparing her own tax returns, but she has been particularly busy in recent months. She started her 2020 T1 return, but quickly decided that she simply didn't have time to finish it. She wants you to help her. Okay, you're the tax preparer here, no problem. So you go over some tax information with her from 2020, and you determine that she has correctly calculated the employment income, business income, and capital gains. They are totaled in the table over here to the right. And I'll just say, when I say not to ask questions, if there's something that you can't see on the screen or there's some mistake, I need you guys to point that out to me. If there's some like glaring problem where you can't visualize things, like don't let me ramble on forever. Like last week when we weren't recording the entire time. Okay, don't let me do that. You gotta keep me in check. So here's the computation of her income from employment income, business income, and capital gains right here. And it's 158,488. Now, I've had people in the past, if somebody tells you that this is correctly calculated, and then you start trying to figure out whether or not this is right, what are you doing? It says correct. Accept that that's true. If I've written that into a problem, that means it's correct, and you don't have to try and second guess it. That's not something that we're trying to do here. Nobody's trying to trick you. No one's ever said on an exam, this is correct when it's not been correct. Unless they've said this person thinks it's correct, but it might not be. This is right. So of the 158,488, you can see what it's made of right here. And irrespective of what's happened in your other courses, I'm telling you right now, for the purposes of this course, there's no way that's ever going to happen. So right there, we have our 158,488, and we can see all of the elements. There's some salary, taxable benefits, RPP. She's got consulting income. That's business income, guys. Interest income, taxable dividends, rental loss. These are all forms of property income. Net taxable capital gains are net taxable capital gains. She's got interest that she paid. So that's an expense relative to property income. And then she's got, that's it. So there's her business, employment, capital gains, etc. That's the amalgamation of those things. And then we've got some more stuff. She's got severance from her employer, right? Severance from your employer is considered other income, despite the fact that it hasn't come up before. I know that it comes up in the course pack. Just FYI, the videos that I produce don't contain every single piece of information from the course pack. I can't. So this is why I say, what are you studying from the PowerPoint for? You should be studying from the Coursepack because that has all the comprehensive information. You want to watch my videos? Okay. You want to read through PowerPoints? Suit yourself. Okay. Totally up to you, but you're going to be missing important information because I don't have every single thing in there. And that's not fair to expect from me. Okay. Spousal support. So she received from some spousal support. That's great. Then we have, okay, we've got moving expenses. So there's going to be a whole bunch of moving expenses. We've got the distance from her new home to her new workplace is 5 kilometers. The distance from her new workplace to her former home is 115. It just needs to be greater than 40. We can deduct these moving expenses as long as they are eligible. Then we've got childcare expenses right here. So we'll take a look at those. And then we've got RRSP contributions right here. And then also we have legal fees paid to appeal her income taxes. So that's one of the other deductions that's sort of the fringe one, okay? So the required is, let's see what the required is. Calculate net income for tax purposes. Cool. I think this is the first time we've done this where we know about all of the different forms of income and various deductions that are available to us. It seems like there'll be a heavy focus here on the other income and deductions because we've done all the rest of them already. So let's dive into this. I'll start up at the top. And the first thing I'm going to do in order to determine net income, remember, we need to include employment, business, property, et cetera, and taxable capital gains. We have all those numbers summarized for us right here. It's 158,488. So I'm going to go ahead and type that in. Now, I've gone here and I've sort of made this so it's accessible and doable in like a non-completely boring lecture for you guys. So here's my employment, business, and capital gains, 158. 488. Okay, I'm punching that in. It's correct. That's part of our net income. Now we're going to have to go through and take a look at other things. So next up is the severance payment. That is other income. Okay, I know it seems like it would be employment income, but it's technically classified as other income. So we're going to look, if you put it in and lumped it in as employment, it wouldn't be the end of the world. At least it would still be a positive value. It's just not correct, right? Not technically. But it would still, you'd get to the same result. So, you know, the penalty for that wouldn't be horrendous, but it's hard for me to say, oh yeah, that's completely right, because it's not completely right. It's other income. Other deductions. So we're done. There's no other forms of income here. Remember, she's got spousal support here, but she is paying the following amount. So this is not going to be an income inclusion. We've got all of the income inclusions so far. So there were, what? There's one other income inclusion. The rest is going to be deductions. So we'll be focusing on the deductions here. Okay. And these come in. Note the order in which all this stuff shows up. We have positive sources of income from business, property, et cetera. And then we also have positive other forms of income, of which there's only one type here. If we had some sort of form of pension income, that would be included here as well. If she had received spousal support payments, maybe she's got another ex-spouse who's actually paying her spousal support, well, that would be included here. But because she is actually paying it to her ex-spouse, that is going to be a deduction. So we'll start with the other spousal support right here, and I think it's $2,000. And that gets dumped in right here. Now we're going to take a look at moving expenses. And I've just laid this out already. Otherwise, me typing it in takes for bloody ever. So I'm just going to go through the various moving expenses here with you guys, and we will, can I make it any bigger? No, that's as big as it can go. And we'll talk about whether or not we can deduct these things. So first up, we have gas for house hunting trips of $40. We know that house hunting is not an eligible expense, so we're not going to be able to deduct the $40. Big deal. A $40 deduction gives you like $10 of actual tax savings. Who cares? That's not one of the major expenses here. We've got real estate commissions. So the selling cost of the former home, it was 100% owned by her. And the reason that we say it's 100% owned by her is because if it had been co-owned by her and her ex-spouse, there's going to be some debate as to who gets to deduct all that stuff, or if it needs to be prorated, right? Right, because the sale of the former home, the expenses would potentially, like, you would sell it for a certain amount, and then you would probably, whatever the expenses were, you would split in some proportion between the two spouses. So here we have real estate commissions and legal fees. Both of those are perfectly deductible. So I'm going to punch those in, and I'll punch in 1050. Expenses associated with selling of the former home. No problem. Next up, we have cost of purchasing the new home. We've got legal fees and we've got land transfer tax. Because she sold a home to buy a new home, then these are eligible deductions. So I will put these ones in here as well. The legal fees being $850, the land being $32.50, and land transfer tax. These are just expenses associated with buying and selling a home, guys, if you've never done so. What is next? So we've gone through these ones so far. Done. Done. This one's okay. I'll just highlight the ones we're allowed to deduct. What's next? Have costs of moving herself and her household belongings. Moving van to transport her belongings. Yeah, sure, absolutely. So $600, no problem. Next up, we have gas to drive herself and her daughter for 120 kilometers. Is that right? $15? Sure. I don't know. I have no idea what gas costs. So the actual cost is $15. Now, remember here that there is a potential per diem involved, and the per diem is based on the kilometers driven. So what you can do is you can compare the two, and then you want to pick the one that's larger because it's a deduction, right? You want the biggest possible deduction. So the gas for the trip is the greater of two things: the actual expenses incurred or the per diem. Now, I told you that the per diem in British Columbia is 54.5 cents, and she drove 120 kilometers. So this is going to equal 120 times 0.545. Okay, so that's $65. Over here, I've programmed it. If you look up here in the top, it's the maximum of those two numbers. So it's just automatically picks the maximum, which is our $65 here. So that is deductible. Right? She doesn't need receipts for that. She just needs to somehow show that she actually drove that far, which, look, if you're moving from one place to another, there's no like proof that you can offer other than, you know, you were in one place, you sold a home, and now you're in another place. So the amount of proof they would need for that is very low. They basically just give it to you, right? Unless it's something exorbitant. There's not going to be a follow-up on that. And so, great, we've covered off this. Now we've got some costs for a hotel. The hotel costs while the new home was being painted. Looks like a couple days. That's not staying at the Magnolia Hotel, but all right, the hotel costs are $200. That's no problem. Again, if you have questions, just write them down, and then we'll come back and we'll look through the whole thing, and you guys can ask me some questions later on. I would love it if you ask questions. I would be so excited if you ask questions. Please do so, okay? We've got some meals. Okay, so again, there's some options with meals because there's a per diem that doesn't require receipts. This is what she actually spent, $110 on her and her kid. Right? Let's take a look and compare it to the per diem. If the per diem is bigger, then that's what we're going to choose because we want a bigger deduction. Bigger deduction means smaller income, means smaller tax, and that's very valuable to us. So greater of the meals, we had $110. Oops. And then the flat rate per diem, it's $17 per meal per day times the number of people. So it looks like there were 2 days and there's 2 people, right? I got to stop saying right. I hate it. Okay. Let's put $1 in the right jar. And then by the end of it, if I have enough, I'll buy you guys a pizza. So flat rate per diem equals 17 times 3. That's 3 meals a day times 2 days times 2 people. $204. Is that bigger? It's bigger, so we choose that one. Do you want me to write down? I think I wrote the math down over here. It's also in the solution. $51 per day times 2 people times 2 days, or $17 per meal times 3 meals. That equals 51. Okay, that's not complicated math there. My total moving expenses, I've summed right here. Total eligible. Super. Now we have to compare it to the income at the new location. If the expenses exceed the income at the new location, well, we're shit out of luck. And we're going to have to wait till next year to deduct some. But the income at the new location is, I think it's 60 grand. If you want to scroll back up here, you can see salary from the new employer. Right there, $60,000. So if I just draw a quick comparison here, I go 60,000. You don't have to do that, but I'm comparing the two and I'm like, ugh, you're fine. Okay, so this is going to equal, they're all deductible in the current year. Have I done this right so far? They're all deductible in the current year. That was moving expenses. Again, you may have some questions about that. Write them down. We'll talk about them as soon as we're done. And I can stay a little bit late to answer questions for people. What else am I going to do? It's pouring rain over here. I'm going for a run in the forest. I want to do it before it gets dark, but I think we'll be okay. Right? I want to help you guys. So now we're going to move on to childcare. We'll focus on childcare expenses right now. Let's take a look. We have part-time nanny. So here's care of her daughter. A part-time nanny. Expenses incurred were $89.76. This is an eligible expense. It's to look after her kid. Next up, YMCA overnight summer camp for 2 weeks in July while nanny was on vacation, $200 a week. This is acceptable. Now there are limitations on this for children. For summer camps, the limitation actually for a kid of this age is actually $200 per week. If this woman, Yasmin, had spent more than $200 a week, say $250, the maximum deduction per week would be $200. This is all laid out in the course pack. It's something I've been meaning to add to the videos, but I just haven't had enough time yet. I'm hoping maybe this weekend I'll have some time to punch them up, but if not, like, the course pack information is there for you, okay? So $500 should be fine because it's an overnight camp. There's some board and lodging associated with that. Presumably they're feeding the kid. I think you have to do that. And then also they're staying overnight. So those amounts count. Fall term for private school. Hey, private school, that's a no-no. So I'm going to say for this one, how do I, nope. That's a no-go. Okay, no $4,000. Before and after school daycare. Oh yeah, daycare's fine. I like that one. And then transportation to school. Nah, that's never going to happen. Transportation to school doesn't count. So those are the costs. We know which ones are eligible. We're now going to do our lesser of 3 terms and figure out what are the actual deductible costs. Now we don't have to do any sort of who's the lower income earning spouse because this single parent who has full-time custody. If they didn't have full-time custody, it'd be a real pain in the ass. I'm not going to ask you a question like that. It's too complicated for this particular course. So actual expenses, nanny, $89.76. No problem. Summer camp, $400. No problem. Before and after school care is $720. We'll punch that in as well. So you can see here, guys, I have laid out childcare. Why don't I do a little bit of a, here's my separate little childcare area. It's the lesser of actual expenses, the maximum annual limit for the year, and then 2/3 of earned income. So we're just cranking through those things. Sorry if I didn't distinguish that earlier on. So the first number is 10,096. Now down here, I've set it to be the minimum of these 3 numbers. I've used that functionality in Excel. So that should be helpful. The maximum, she's got 1 kid and the kid's under 7, so it's $8 grand. And now 2/3. Now you can see her earned income is going to be way more. Like 2/3 of any giant number is going to be greater. I still need you guys. I still need to know that you know what's in earned income, despite the fact that I'm clearly confused about it. But so earned income, we've got salary. Like, where do you get the earned income numbers? They're all contained up above. When you were given that individual information about her employment, business, taxable capital gains, etc., that's where that comes in. So you just look through here and you're like, okay, what's going to count for earned income? Well, here's some employment income. We've got some taxable benefits right here. That's going to count. We've got business income. And I think that's it. I think that's it. So I'm going to go ahead and punch that in over on my left on my template. So the salary equals whatever it is, 96,000 plus 60,000. That seems right. The taxable benefits were what? 1743. 1743. And then also there's some consulting income, which I want to say was $8,000. I think that's correct. Okay, so there's her earned income for the year. Now with RRSPs, it would be prior year earned income, not for childcare. It's the current year earned income that we're utilizing. So we'll take that, we'll multiply it by 2/3 equals this. Okay, so you can see that this number is like 110 grand. That it's never going to be that number, or it's unlikely, but it's a possibility. So the smallest out of all those two things is the 8,000 right here. Right, this is the one. Choose this one. So down here we've got $8,000 worth of eligible childcare expenses that are deductible. All right. And now we're going to move on to the RRSP deduction. This is a very simple RRSP calculation, thankfully. We've got a couple things to deal with here. RRSP savings contributions. So the year right now is 2020. We're trying to determine the contribution room for 2020. So here are her contributions. She's contributed in 2020, from March through December, she contributed $9,000. Okay, so that's one contribution that she made. In addition to that, she contributed in the first 2 months of 2021, she contributed $1,000. Now, RRSPs are interesting in that you are able to contribute to, let's say, your 2020 RRSP in the first 2 months of 2021. And the reason for that is people usually need to wait to figure out what their net income is for the year in order to determine how much of a RRSP deduction they would like to take. Some people really want to maximize the ability to deduct RRSPs, but their income might not be very high, so it might make more sense for them to carry that deduction forward to subsequent years. So what people will do is wait until their T4s come in. Now, you guys, maybe you don't know this or maybe you do, but the T4 for the year, let's say 2020, you won't get access to that a lot of times from your employer until February. So this is how, and then also you need to do your, if you have business income, generally it takes some time to determine what your business income for the year is going to be, which is why they give you an extra 2 months to contribute. So that's why that's the way it is there. So let's go take a look at our calculation of our RRSP. So the RRSP deduction that one can take in a year is, and this doesn't come up in the slide because we hadn't dealt with multiple years, but it makes sense when you think about it. It's going to be the lesser of the amount that you actually contribute and your limit for the year. If you contribute $200,000, but your limit is only $20,000, you can see it's the lesser of those two things because that was your contribution limit. So let's take a look. The annual contribution for Yasmin here is 10 grand. I hope everyone agrees. It's 9,000 plus 1,000. Now we're going to figure out, well, what's her actual deduction limit for the year? If it's less than that, she's limited to that. If it's more than that, she's fine with the 10 grand. So it states here she doesn't have any, so for RRSP, her 2019 earned income was $120,000. Her employer had reported a pension adjustment for the prior year of $9,500, and she has no unused deduction limit, meaning up until this point, she has deducted the maximum possible amount. There is no carry forward from the prior year. If there was carry forward unused contribution room, you just add it on, right? Like I said, if you don't use it in a prior year, it moves forward to next year, and then you can increase that limit based on the current year limitations. So here's her deduction limit for 2020. She has 0 unused contribution room. The annual limit is $27,300. It's the lesser of these two things now, right? The annual limit, okay, I'm going to say plus lesser of 1 annual limit and 2, 18% of earned income from the prior year. And so this more accurately would say PY. PY equals prior year. I'll write that here. So 18% of 120,000. So look, I'm going to put in 27,300 here. And let's see, 27,300. And then down here, I'm going to have equals 0.18. What's the smaller of those two things? It looks like the smaller of those two things is this number right here. That's the smallest one. So I'll make that equal to this. And now what I'm going to do is I am going to subtract the prior year pension adjustment, which is 9,500. So now what we've got, okay, is the RRSP contribution or deduction specifically that she'll take in the year. The RRSP deduction is the lesser of, well, what did she contribute? She put 10 grand in the bank, okay? And this is her actual limit, right? This is the actual maximum that she could possibly take in a year. That's the amount of room she has is 12,100. So you can't deduct more than you've contributed. She's only contributed 10 grand. So her deduction for the year is going to be the amount that she contributed. It's not the maximum. She only contributed $10,000. So there, this is equal to, it should say equal minimum of this. Oops. Sometimes I'm not good at this. Bracket this and this. It's still 10,000, right? I'm trying to put some Excel functionality in there. And I think maybe we're close to the end here, except we've got one more thing. Legal fees paid to appeal her 2014 income tax assessment. Like I said, if you're paying legal fees to fight the man, you're fighting the CRA, the CRA, they've misjudged your tax return for the year. You've incurred some legal fees to fight them. It's $1,200. So you can deduct $1,200 down here. And that, I want to say, right here is the net income for tax purposes, including all the income inclusions and our other deductions that we just learned about. So that's it for this one, guys. Hope you enjoyed it. Stay tuned for our next horrible torture session involving some giant problem. See you next time. So that's where I'll cut it off when I post the individual question. But for now, you guys can ask me some questions. How do we get to 27,300? Yeah, the annual limit. What's the annual limit for this year? Is it 27,230? I think it is. Let's see. I think you're right. There it is, 27,230. Well, great. Now my whole video is ruined. It's not really, it doesn't make any difference to the answer. Okay, I'll splice this in. Hold on a sec. Hey, just a quick addendum here, guys. When during the video, I stated that the annual limit for 2020 was $27,300. It's actually $27,230 as highlighted right here. So apologies for that. It makes no difference overall to the outcome, but it's important that I use the correct number. So thanks. Okay, sorry about that. Is it set by the government? Yes, it's set by the government. Okay, more questions. Anything you guys want to talk about? I can put the screen back up there and we can talk about it. So Doesn't seem like there's any more questions for this one, guys. So that'll be the end of our virtual meeting for today. I had a great time. I don't know about you. What's the future like, people in the future? Do we have a vaccine for COVID yet? Am I still alive? Who knows? If I'm still alive, send me an email from the future. Tell me what it's like. Till next time. Hey guys, thanks for watching this video. Did you find it helpful? Well, there's plenty more videos for you. Check these ones out right up here. And if you really found this helpful and you want to be updated of all the latest videos, why not hit subscribe? It's that button right over there. Check it out, guys. See you next time.